Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast.
All right, good morning, everyone. How we doing? Hold on. Sorry about that. Just some dramas this morning. All right, where are we at? So, morning's just got yeah, sorry, I'm just trying to gather my wits. Bloody kid stuff. Just the last 30 minutes I've been trying to like quickly sterilize bottles, prepare. Okay, so where we're at. We had a pretty crazy day yesterday with CPI. Just made a mess of everything, which was widely expected. Normally, a lot of the time, what CPI will do, if it's not such a huge miss, as in like not a huge miss, but like if it came down lower than expected, and it just led to these bulls just taking charge. So we didn't even see any correction. It was just steady, just up, 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 and up, and up. I didn't have a great day yesterday. I set a bunch of pending orders that got smashed, really. So I really, I don't know why, but I was expecting some of these levels to hold up more, and price just literally. So this one here, normally German does give a decent pullback, and I literally had an order at this New York zone, no wick, 550, and this guy here, I was only looking for like a reaction down, pretty much down to here, and this here triggered my stop loss. It was just an instant gone. Bit of a pain because German a lot of the CPI a lot of the time does these big corrections and then makes these steady moves up. So I didn't have a great one yesterday, and plus I missed all the trades in London. That was really, really, really annoying. Oh, sorry, man. More dramas. Sorry, mate. Sorry, guys. The joys of a newborn. Okay, so now, anyway, so CPI did missed. Stock market is just loving that news because the stock market is just it's just repricing the odds that rate cuts are going to come sooner to support the economy. That's going to bring into focus rate cuts around March, May, and June, potentially, that time of year, which is going to be precisely around 7 months in the future. And the stock market is usually looking 6 to 12 months. They're always looking forward. So they're going to start pricing in the possibility of that happening. So I would say leading into the rest of the year, as long as we start seeing like good news, well, as in bad news for the economy slowing down in the US, I think we're just going to be able to see US indices continue to push bullish. And the way that these indices work, German 40, it's got a 90% correlation with the US market. So most of the cars, BMW, blue chip sort of stocks, Volkswagen, Mercedes, all of them make up the top 10, German 40. You've got Siemens, you've got SAP, you've got Airbus, you've got other companies that most of their profits are made outside of Germany. Germany's got the biggest export differential, pretty much against any other country. They try not to import as much at all, apart from energy. So I'd imagine that because of the US market will keep on going bullish into the end of the year. I'd say the same is going to happen with German 40 now. So bias is just going to remain bullish. Really pissed off about last couple weeks when I was really hoping to see a pullback into this zone, into this blue zone, before we start to see this move. So I feel like I've just really missed a lot of this move, a lot of it, a lot more than I should have. And then yesterday was just the icing on the cake, where yesterday's London Open was looking for buys from here, just missed. And then as we pushed up, I was looking for a sell from here, and didn't get either. Just literally just pips away from getting the buys, getting the little sells. Anyway, so to be it. Then CPI came and actually took a loss. Target today, I'll keep things quick because we are on I don't know when I'm going to be called away. But I'm going to look for 15,700 to be hit today. So I'm going to try buy pullbacks into the 15,700. Just got to be mindful, we've got so much liquidity left behind that I don't really want to buy straight after a new high without having some little pullback. I'm aware we've got trading up. People can't see this, but my stream, you can see this. Let me just maximize everything. Okay, can you see this little exclamation mark? It's saying that there's a data issue, short-term data streaming interruptions. So I'm keeping an eye on my MetaTrader terminal next to me, but it looks like it's all keeping up. Sometimes I felt like it was moving a little bit slow. So, but yeah. Oh, what's this? Oh, yeah, guaranteed trades. Yeah, I know. I'm not really a fan of that title, guaranteed trades, but I think where it is miscommunication, where there's every morning we'll have some trade setups, whether we can get them or not. There's no guarantees in anything. So yeah, I had no control over the titles, guys. Just to let you know that. This is good luck. Top list. I just moved my stops to break even for a short GU. Nice, man. Good one. What currency? This is German 40. Martin, you've already done trading. 10% up. Good, mate. That's good. Loss is part of the game as long as you practice sound risk management. Yeah, of course. Yeah, definitely. That's the thing. Got to make sure risk management's on point. Am I trading ICT? No, not really. Not ICT. or supply demand. It's more the zones, liquidity, price action. Based on your experience with the DAX, is it easier to trade the London session if Asia session is ranging, or there's a clear bullish or bearish move? It's a good question. I've thought about that quite a bit. There's I don't like a big Asian session, but I don't mind if it's ranging. Or like lists, like where it sort of moves around 30 to 40 pips. That's the ideal. Whether it's bullish in it, I don't mind. I don't really see much of a correlation with anything. All right, so I don't really have many zones to go. Haven't really had a lot of time this morning in my usual routine. So I'm just looking to buy the pullbacks. The zones I'll be looking at all the time is going to be an Asian low. We've already broken the Asian high. Now we've got this Euro zone. So I would like to see price sort of sweep. We've got trend line liquidity building up. I find, depending on the carryover, I know CPI in UK and PPI actually are coming down quite a lot as well. Core CPI definitely not as much as headline CPI. So you take out some of those more volatile ones, and we're seeing that inflation is still remaining pretty stubborn in the UK. But I think the stock market just usually finds any reason to be bullish. So let's look for pullbacks. Let's look for longs. Let's look for targets at 15,700. What will be really, really excellent is if we push up and we don't quite get there, and then we pull back, because then once price stabilizes a bit, we're going to continue pushing up and up and up, and that's going to be the target for the day, 15,700. Let's go and bring up full chart view. So we've got the 30-minute on the bottom left. We've got the 15-minute on the top left. So this is 15. And you can see the watermarks of 15. Starting to create like a little bit of a support over here. This 15 minutes, grab a little bit of liquidity for the German Open. That's the German Open candle. This one right here. That one is German Open. And then 30-minute candle. Well, the second 15 of the 30-minute, we've grabbed liquidity in this wick. We've got another one over here. So kind of this one retesting the body. It is. So we've created a support already. This is a little support created. Now, on the 3-minute, if we cast our eyes over to the bottom right, over here, we do have a resistance already created. A resistance is created on the 3-minute here. Okay, so this is your, let me just redraw it so I can show you that you got this candle over here. This one's wicked up. This one's made a new high and then closed bearish, and we've created like a little bit of a rejection wick. This one here was a little bullish one, so we actually created like a little bit of a range at that point. So this is actually that's a little tiny range, and we finally closed underneath it with this candle. And this one here is confirming that resistance because it's retesting this first liquidity candle. So it's opening the doors to push down further, come up, little retest, create another little lower high, starting to push down. This is really nice to see because if you've got a resistance over here and you can see something close and break above it, then you can hold that as support, and then it opens a door for another 50 pips potentially to the upside. Okay, so until we get a confirmation at least up above here, or we start to see price pull back for London to get a better price to maybe to the Asian low, grab the liquidity from the Asian low. If we're making new lows, we've got to wait for price to stabilize and then start to push up again, or grab liquidity from underneath, like a strong liquidity to support going a little bit further to the upside. But right now, the flow for London and pre-London at the moment is more to the downside to the up. And that kind of makes sense because we've just rallied so freaking much with yesterday's move that buying here for London is going to be, they more than likely will try to get a better price by pushing price down a little bit before they actually jump in. They could even come down as far as into this red zone before it holds that support. given the speed of the move yesterday, and that's that one-sided, and CPI often gets faded out. Often. So I'm looking for the long side. However, I'm aware that right now on these lower time frames, we're starting to see structural reasons to be looking for sells. Any questions, guys? Morning, John. Anyone see the market otherwise? Speak now. Don't tell me afterwards. Don't tell me where you took. Was that? No, yeah. Full correction. Yeah, the market's looking ahead. So, yeah, we had CPI for pound. You see, like it came out 4.6%, less under expectations, which is 4.7, a 2.1% drop from 6.7. So this is CPI that looks at everything. So most of the drop was in energy. So, but you look at when they look at core CPI, you take out the volatile goods of food, energy, alcohol, tobacco, then prices like inflation is bloody sticky as. We're not really making much ground. It is sort of creeping down. It's the lowest it's been since this year, 5.7. But geez, it's taken a long time to get down. We've got PPI later as well. The other thing about pound, and this is a little bit where it's what's a bad number for this? Well, I think it's a little bit cooked, these numbers. CPI 4.6% has come down. Now we're looking at like PPI, and which is the more leading indicator from here? Would it be producer inflation or consumer inflation? It would have to be producer inflation. And look at producer inflation has actually crept up month on month. So from the producer point of view, it's still fairly high. RPI, RPI, this is a big one as well. This is where a lot of it's still 6%. This is where a lot of building, ground rent, and all that kind of stuff it goes on RPI figures. All right, we're due for the open now. Any second, 20 seconds. Don't look at Dixie. For US pairs, I'll look at Dixie. So let's just see what's going to happen. What's VIX at? VIX is at 14, pretty low, so that's good for stocks. So let's just see if it's just going to rally and rally and rally. But to me, I think it should break into this area. I think I'd like to see it break into here and try to anticipate we're going to break this resistance. Once we're above here, I think we've got clear sailing. But I don't want to take buys like in this zone. Morning, Beata. I find buys here right now, pushing up into here can be that's really anticipation. Oh, you mean for indices? No, not really. Oh, here we go. Okay. Now, this is the first 30 seconds. Are we just doing a liquidity grab from resistance? Because this is the resistance. It's done the perfect touch of the resistance. If we can start to form a base and then start pushing up again, second touch into this area, more than likely to break then. Let me just get the guns ready. So until I see price stabilize, then say, oh, you know what, we're not actually going to break this low. But I would prefer to see us break this low. I would prefer to see a pullback before the longs. I mean, you could look at indices. Not indices. Dixie. If Dixie's Usually a weaker euro's better. But I don't want to confuse things with Dixie, because what if Dixie's not telling me to go long? Well, it's not quite at the level, but this price action is telling me to go long. Like I would rather take this one, because rather than have introduce another chart, another variable that now I'm going to be like, oh, I'm not sure. It's going to create doubt in my mind, I think, by adding too many things. Okay, so we did the retest of the resistance. Now let's form a support, and we want to see signs of it coming back up there again, because the first reaction, that's the dangerous one. So the first 3 minutes is just in, real volatile candle. Just broke the highs, broke the lows, closed as a small little body. 5 minutes still open, and 5 minutes is still respecting this this resistance. Where's the red box? I can't see red. Yeah, come. Morning, mate. Yeah, with the news yesterday. Just want to see a pullback first. So got a little 30-minute support in the Asian session that I'd like to see it pull back to. And this is like your Asian 50% as well. Then it can sweep the euro low, but maybe that was the pullback. It's just gonna. Let's hope not. So I'm not tempted. I'm not tempted to trade in this zone. Unless you're getting like a great entry, for me to enter anywhere in this bit, risk reward is just simply not there for the amount that this could still reject. Okay, broke the high. Oh, close inside. The 5 minute close nice. First 3 minute candle, little volatile candle, and the next 3 minutes just powered up. 5 minute closed quite a strong candle. So you can need to see a wick form, and then start pressuring into the zone. Oh, is it? No, MetaTrader's. Oh, it is too. MetaTrader's moving. Yeah. So they did say there was going to be some issues with this data. My MetaTrader's moving. MetaTrader moved up, and then it's pulled back a little bit. I might have to trade something else today if I'm going to do this. Come on. Oh, damn it. Looks like it's powering up now. Let's refresh it to see if that can. No. It's frozen. Yeah, it's Trading View's German 40 feet is frozen. Yeah. Okay. Yeah, I was thinking that or NAS. Trade USD now. No. Oh, we're going. It's pushing now. Bloody hell. Yeah, I see too. I can't trade. That's what I heard Raja say that yesterday. It's pretty funny. Oh, there we go. Now German's back. Damn it. All right. So I think it's pushing above this euro high now. All I want to see is a little bit of a pullback. Price to stabilize. Keep going up. And I don't think it will hit 700 in this London Open though. I think it will likely push up and then form a support then to push up. But we've taken the euro high, taken the resistance here now. Now we just need to see it. Once we break the high, come down, form a support. Hopefully this just wasn't a liquidity grab. So just wait for your confirmations because this is looking like a liquidity grab at the moment. Okay, can we... Okay, come on. Do the wick fill. Pretty nice little pullback. Expected from these euro highs. Hey, Rob. All right, now should just hopefully just blast, huh? Just be no pullback. Just be careful with this little green and purple bit, this intersection. Just keep pushing. No, it was pretty quick. It was pretty quick. So like I got a little entry, but it was when I didn't want to. It was so quick. I'm just gonna say I didn't get an entry because didn't have time for it to. Didn't see this candle quickly enough. I didn't see this candle quickly enough to think, retest the open of it. I can see now here in hindsight, my entry was pretty poor. So I don't want to claim anything. So I'm gonna wait and see if I can see a better entry to call, and be happy that we skim the bottom 10%, skim the top 10%, just see if we can take the meat of the move. The direction was clear. Getting into the trade, that was a little bit sketchy. And I know that would have been, if I said I'm going to get in here, that everyone would have, you had to have your own idea on how to have got in. Because you see how quickly that moved, just waiting for me to say when to get in here. Everyone would have had such different positions and entries. I'm still concerned that there can be a bit of a pullback. So buying up near these highs, you could be buying the high before it does that pullback. If you've got an entry already, there's no reason not to hold it now. But just be careful of this little bit over here. And if you're watching and looking and thinking you couldn't see anything, when it reacted from this euro high, you usually do get a reaction, okay, when it pulls back. So it took the high, pulled back like 20 odd pips, came back to this candle, lovely liquidity candle. But that was pretty aggressive how quickly it moved down and then up. So you need to be quite comfortable that that's your entry type. But definitely just keep on looking for longs. Just take advantage of pullbacks. Is it safe to place a pending order on the 50% of the M5 candle? Stop loss below the wick. Safe on the 5 minute can be risky. So I'd say safe in the sense that this is the thing. If you're going to be using the 5 minute candle, your stop losses are already so small that you might as well use the open of that candle. Because when you factor in spread, when it gets to the 50% and then has to go under as well, and your stop loss is right here, that's too tight of a stop. So I'd rather just say, like, try maybe do on the 15-minute time frame. Like, these are going to be a little bit of a stronger candle, but gives you, like, I would say on the 5 minutes, your stop losses are going to be too tight. But pending order, if you left it on the open of that candle, depending on spread, that would have whether it triggered you in or not, but is a question. But sometimes it's actually, once you see that and you're setting it up, a limit order would be better than a market execution, because as soon as it gets down there, you open up your mind for if the limit order's there, it's already there. But if this comes down, ripping down really quickly, and you're waiting to hit market execution, then the speed of that can come down. You may just hesitate. And that hesitation could cause you to miss the move as well. So sometimes a pending order would be fine. And I would say just use it at like if it's a 50% of a higher time frame candle, lower time frame candle, just use somewhere in the open to the body. Okay, this is the danger area. If it rips up and just hits 15,700 in one go, excellent. If it doesn't hit there, then it's going to leave the door open for people to, because this is imbalanced at the moment, it'll leave the door open for people to grab. Once price comes down, stabilizes, and starts pushing up again, you can look to trade this triangle. Just know that, try not to grab the bottom part of it. If you're good, you can try catch the real bottom part of the triangle, but you're better off just saying that I'm expecting a pullback, and then just forego this part and forego this part of that move, and just be happy taking like 80% of the move. Oh, Peter, you had to drop out as you had a frozen screen. My charts froze during this part. Oh, sorry. Yeah, this candle here, pretty much, it froze for a few minutes. The links in we've got heaps of people here. It's in the Discord. Yeah, because there's this little warning, and it said there's a data issue, so there's some short-term streaming interruptions. The link was there, but it isn't shown on my Discord. What? The channel's not showing. Oh. Oh, when your internet went off. Oh. Oh, maybe that's the same thing happening, Peter. Because we've got a bunch of people in here, so everyone else found it. Reset your internet. Your bottom charts is 5 minutes. Oh, thanks, mate. Yeah. I was playing around at the time. Yeah, this is the danger area. Morning, Heath. How are you? Because this when I've got this showing on my chart, when you've got this blue and purple, geez, a colorblind, green and purple box, that's a higher time frame liquidity candle or engulfing candle. That's the wick. So this would be back from like September. So if we go all the way back to September, we'll go to the 4-hour chart. It'll be either 4-hour or 3-hour or something like that. Okay, so maybe the 2-hour. Three-hour. Yeah, 3-hour. So this is the 3-hour. Okay, this candle, this is a rejection wick over here. So I've just used this GAN box to mark the high, the mid, and the open of a candle. And this is pooled liquidity inside this wick, and we've had this drop afterwards. So often when price is pushing up into this wick, you can find reactions at either the open, the mid, or the high of it. And the midpoint is surprising how often that holds. So that's where I've said over here, be careful. Be careful of that little area. Why is it a rejection wick? Because at some stage, this candle had been pushing bullish, hit something that turned it around, and then it closed heavy bearish, and then we just saw it just push and drop and drop. So something happened inside of this wick. And the timing of this one here is a London Open candle. This is the first 3 hours of London Open. Well, maybe it's an hour different, depending on, my mind's not going to work out if this, because this is 8 o'clock to 11 a.m. today. But back in a month ago when we had daylight savings, that would have been, it might have been 9 or 12. My head can't think of that right now. Or 7 to it would have been 9 to 12. So either way, forget about that hour. It's London Open. So London Open did a buy to sell. So that buy to sell means that there's going to be some liquidity at this point. So these are reaction zones. Okay. So that's what we're seeing, price pushing up, and we're just hitting some of those residual orders. Maybe not enough to change to say, oh, I'm going to look for sells now. But what it could do is give you a area where you can expect a little pullback to keep on buying the pullbacks up to target zone. Yeah. Yeah, the only thing here is that we left it in balance. So I would like to see price take out this imbalance candle and then stabilize, create a support. And then if it starts to try break and then flipping bullish, I think that would be signs to get in again to maintain this trending structure. We just want to make sure that you're not buying necessarily when you've got an imbalance candle right here, because I think this candle's done the liquidity grab. Yeah, whether we see this as a doji or not, it's definitely a doji for price to come back and grab that liquidity. Or has this candle picked up that liquidity and we've pushed price up? Now we're just having a little bit of relief, buyer's relief, come back because there was a bid. Oh shoot, sorry. There was a bid put in this candle, reading the candle, this particular time, there was a buy order that all of a sudden, because most candles have top and bottom wicks, and for some reason this one has got no bottom wick. So there was only buying pressure. And for buying pressure to be there like that, is not going to be something like us as little retail traders. This is an institutional order that all of a sudden, it just overwhelmed all sellers, because there should have been sellers inside of this area. Where you got all these contrarians ready to jump in to sells, and all of a sudden it just swept it. So when that got filled, often there's a little bit of, you find price will come back to these imbalanced candles, and then they can start to go again. So I don't like to take a buy straight after I see one of these without that coming back and being retested. You know what someone told me yesterday? Just stop talking and just sit and just trade. One of the comments, stop talking. That's the norm. So I'll just sit in silence now, and I'll just there'll be nothing going on. Yeah. All right, so pulled back. See where we pulled back to? Because this candle opened here, but this one closed here. So see those little gaps? So this has come back to the open. So we're creating lower highs still. So it'd be nice to see that once the pullback is over, once the pullback has come to an end, and that's the first on the 1 minute. Respected the rule, close inside, go to the bottom. Oh, I see. First structure inside of here. Yeah, close inside, go to the bottom. Thanks, Manny. Okay, this is a resistance formed. So same deal. Once you break it, we're going back up. There's a sell, there's a sell. So you arrived all safe, Manny? You're there? How long? You're there for a month, is that right? It's near Pune. Pune. How do you say it? Pune. Okay, so is the pullback done now? And now we can do the wick fill. 15 minutes still got that imbalance there. Let's let the take the 15-minute imbalance. Gold. What are we at? 970 or above? Yeah, US is selling off, huh? USD. This is what happens when when US dollar is so strong. Investor behavior is so net long because of the interest rate differential. So once they've seen this sign of weakness with inflation cooling down, it's just really putting a bed, making putting the end to the Fed's higher for longer, and you start seeing this investor behavior pulling out of those net longs, and you see just this real sell off. Of course, if more data comes in that inflation is still sticky, and like this last 1% that they still need to get is going to still be very difficult, then you can see like this could just be significant, severe pullback, but you can still see some bullishness coming back into the USD. Lovely liquidity sweep. Now we're taking out that 15-minute no wick candle. So what we push up 25 pips drop from this point. So if this is the manipulation zone, let's see if this can hold as that support. But we've got this, can't ignore what is happening here, because London could be doing a buy to sell as well. Where we're going to hold support from this manipulation zone. Okay. There is right here. Yep. I'd like to see this candle close as a little support candle. Because we'd be thinking something like this. No, not even. Oh, damn it. Yeah, that was it. I was hoping it was going to close and then retest the low of that candle and then start to push out, but we started breaking these highs a little bit. Still might be there. I don't want to chase it because of risk reward. If it's rejected here once, it could do it again. So that's too much risk. See if it can come down. Otherwise, it just came back to the manipulation zone, like just a perfect retest. And now we can go, yeah, there we go. Yeah, came back to the 15-minute balance. As soon as it took the low, now we've got the wick fill. Little gap as well, geez. Very nice. Yeah, lines up perfectly with it. It's USD weakness. USD weak. Gold is I know when you've got the correlation, because you would think of gold as a safe haven, So you'd think that gold would be going down and stocks would be going up. But what's happening is stocks are going up because of the optimism around the world. Gold is going down because US dollar is so weak. So it's not gold pushing. It's US dollar dropping. Gave 1 minute liquidity candle. Maybe this bit. Yeah, look at that. It's so nice. Now we're pushing up. Yeah, beautiful. Very good. Very nice price action. Price pushing up for buyers. Respected off this little area bit. Just buy the dips. Keep them. Very nice. And then 700 is the target. Typical London range as well would be around 100, 120 pips. So the first hour often gives you 80 pips move. So if we looked at the from low to high, yeah, they can do it in this hour. It's only 70 pips to the monthly level. Your entry is on. Oh, you got it from the 15 imbalance, Alan. Awesome, mate. Yeah, it made sense. Like it's when you see these imbalance candles, it's pretty important to wait for them to be retested, isn't it? You can see even here pre London, 2 imbalance candles. Price came back down, swept it. That's the annoying thing I found with last week when I had that hour clean candle imbalance and price is pushing here. I was like, you know what? So good if it just rips down, takes it, and then goes. But it just stopped and went up. Chris Gyro had to head off for a while. Had a few small buy wins after the pullbacks. 5 minute. Awesome, man. Let the haters hate. Yeah. Yeah. Thanks, Val. Euro pound's close. Go reacting. Okay. All right. Well, 27 more pips to go. 25 more pips to go, and that would be the session target. All right. I've got to go and sort out something. So I'm gonna go grab a coffee. I'm going to switch off the Trading Nut stream. I'm going to continue on my channel. All right. And then we will just go through the ideas later on as well. So Trading Nut stream, come over to my channel if you want to continue. And there's music playing there. And you can listen to that at the same time. Okay. So just search that on YouTube. All right. Yeah. So check that out. All right. Cool. Alrighty. So I'm gonna end this one. I think that other fella's on tomorrow. So for trading it, guys. So I'm back on Friday. I'll see you then. Unless I see you in my stream. Okay. All right. Take care.